Welcome back to the On the House podcast here at Rochester Homes. Today we've got a really interesting podcast for you talking about home loans, home financing, and we've got the president of our local bank here, which is First Federal Savings Bank, Evan Gottschalk. Hey, Evan.
Hi, Alex.
How's it going today?
Good.
Okay, so I'll give you kind of a second. Just do us a favor and introduce yourself.
Okay. I am a Rochester native and kind of grew up with a dad and grandpa and grandma in the real estate business here in Rochester, Gottschalk Realty. I remember enjoying kind of the business aspect of that, going into an office and seeing people in suits and with 10 key calculators that you could play with and electric typewriters and things like that.
The standing joke around here is no one knows how to use those anymore.
That's kind of true because even like in the banking industry, we're kind of throwing those out now.
Yeah,
which is weird because I thought those were physically attached to the hand there for some people. But I really enjoyed like having a father, grandfather that owned their own business, went to work, helping people, service oriented. Here in this community, so that kind of shaped my outlook on what I might want to do in the future. I remember though in elementary school when they asked what your dad does for a living, and I said realtor, and I couldn't even say it right, and I didn't even know what it meant. So kind of interesting, but that actually has come full circle for me, and got into banking, studied that a little bit in college. Got an opportunity to work at First Federal Savings Bank when I was in college as a bank teller and kind of learn the basics about banking and building relationships and things. And
so real quick, before you went to college, did you say like it's going to be banking?
No.
It was just business.
Business.
Okay.
I respected kind of the appeal of what my dad seemed to do, which I didn't know a whole lot about. The specifics. But no, I wanted to go into business for those reasons.
Okay.
And then as I got into college, I decided economics might be good. And I think the reason why economics finance is I'm kind of a big picture, long-term thinker type of personality. Mm-hmm. I like to think of things of what we can do over time to improve things. So I learned a little bit about that in college, and that appetite grew and grew. Then I had the opportunity to get into banking as a teller, local opportunity. I knew the bank pretty well. I had a family member work there in college as well, so it was very familiar. And once I got into that seemed like a real viable career option for me, even though I didn't know everything that went on at a bank at the time. I just knew about helping customers, honestly.
Right. Yeah, I feel like most people, including myself, know nothing about what goes on in a bank overall.
That's right. It's very intimidating.
If someone had asked me, like, how many employees are at First Fed before I knew you, I would be like, well, there's probably 8 people in the Rochester office, but how many are there?
72.
Yeah. I was close.
I know.
It's 10%.
I think that's probably very true for everybody out there. It's like a very intimidating type of business. Everything's done behind closed doors, in offices other than the 8 people that you might see or interact with.
Right.
To help with your customer service.
Right. Well, like how many people buy multiple houses in their lifetime? Is it a low number? Do you know?
You mean to have more than one at once?
No. I mean, like, how many people get to be experts in the financing of houses because they do 2, 3, 4, 5 homes, and it's got to be a low amount of people, right?
I think that's true.
Yeah.
You'll have your experts that buy and sell, and they enjoy that, but that's very rare.
Yeah.
Most people, they don't want to go through that process that often.
Right. So I kind of liken it to like when you're young and you're getting your first job and then your employer's like, here's your 401k information, sign here, sign here, sign here. And they just start taking money out of your check. And you just kind of like look around the room and you're like, yes, sir.
That's right.
That's kind of what I like in at least the way I went into my first mortgage. Like it was just like, I need some money to buy this house. And Ben Dalton from your guys' branch was really helpful to me. But I wasn't really educated in the matter. It was just kind of like, I think you should do this. Trusted Ben. He did a great job. We went through a wonderful process, but I didn't know a ton about it. And then when we went to buy our next house, start from scratch. I just didn't remember anything.
That's a good point. That actually gives a lot of good insight into the entire process. It really needs some leadership, some maybe consulting, someone expert you can trust. So let's back up for a second. And First Federal, you're talking about financing a mortgage, because obviously this is a show about home buying, home building.
Yep, that's what I want to talk about today.
First Federal Savings Bank, that's our mission. that's what we do. That's our focus. And
bread
for
and
the
butter.
last 53 years, home ownership has been kind of our passion, our mission. The reason why we were created in this community was to provide home ownership for people, local options for that. Previous to starting in 1966, you had to drive out of the county to go do your loan application to buy a home to a bank around there, because the local banks didn't do that type of lending.
Yeah.
So we've stuck with that. In those days, a lot of savings and loan type businesses started up, banks, because you also couldn't branch outside of your county. The bank could only exist in one county at that time. So that's why you had a lot of small banks everywhere to fulfill these types of services.
I never knew that.
The rules changed after we came into existence, and then now over time you've seen a lot of bank consolidation, and also it gave opportunity for like a savings and loan like First Federal started out as. A lot of those types of businesses started doing commercial lending over the years as well, because they could expand their market into areas that had more business.
Yeah.
So
you guys grew to how many branches?
We've got 6 locations now, but the nice thing for us has been the internet. It's probably true for every business, right?
Yeah.
It's allowed so many other things, and that's really allowed us to expand beyond like branch capability also.
So, but you don't mean like you guys aren't doing are you doing a lot of home financing over the internet?
We take applications over the internet, which makes it easy for someone in another state or elsewhere in our state, we're not near convenient to a branch, to put in and make contact with us, communicate with us, transfer documents electronically and securely. So it's possible to do a mortgage without meeting you until the closing table.
Is that becoming a big part of your business, or is that kind of a slow growth area?
We've had, we've been doing that since early 2000, mid 2000s, I guess, 2006 or 5, I think is when we started doing online applications, and it's been a big business for us pretty quickly.
Really?
Mm-hmm. So we actually lend in a lot of areas around the state of Indiana, states around us, and then we got a lot of people that buy a second home in Florida, for instance.
Okay, that makes sense.
They don't have to live here. Maybe they're in Florida full time now, and they want to refinance something.
Yeah, interesting.
It is interesting. It's allowed us to have, a $400 million bank, which is kind of a smaller size institution that's kind of the deposit number.
Okay.
But we're able to do $1.6 billion in mortgage loans.
Wow.
Because of some of those things. And we'll talk about another reason why that's possible too. But being able to reach outside of our footprint has been a huge key to that.
Yeah, that makes sense. I've always got to separate in my mind. I think of housing as all new all the time. So you got to I need a slap on the hand occasionally. So it makes sense that, to go buy an existing home, you're probably a little bit, is it easier to finance an existing home loan over the internet than it is a brand new, new construction loan, or are they the same?
It'd probably be easier for something that's existing.
Yeah. Okay.
There's less document transfer, probably less details to walk through.
Okay.
Fewer questions to answer.
Yeah.
And especially you got to consider too, over time interest rates change. So a lot of things that are easy over the internet too are refinancing into a lower rate.
Yeah.
Improving your payment structure. You can save a little bit more money each month.
Okay.
Lowering your interest rate. Those are so easy to do online. So even the purchase transaction, if I'm buying an existing home, is probably easier in person, just because you might be dealing with a realtor, you've got different things, contracts to pass through and talk about. Okay,
that makes a lot more sense. I mean, because in my experience, just in this small little niche part of the business, new construction, I just remember in 2009, the economy was in the tank, and we were doing anything and everything we could to hook people up with banks that would finance. And so we formed some relationships with some banks that were really wanting to do everything online and really focus on modular. And we put those people in touch with our customers, so a builder, who could then put those people in touch with their retail customers at the time. And it never took off. Just sat on the runway, as it were. So in my mind, I've always said to myself, online banking can't be that big of a thing. So but I appreciate you enlightening me on the fact that there are things outside of new construction, Alex.
Yes, and I would say too that the purchasing of a home, the arranging financing to build a home, it does take some time. Mm-hmm. So even if we're working together and you put in an application online, the whole process does take some time. I just saw a statistic: the national average to arrange financing to purchase a home is 45 days for that process.
Okay.
So it's not a quick one, even with being able to transfer information or not having to be in the same room together.
Sure. And you're saying the national average for all financing?
Correct.
That's not existing or new construction. That's
correct.
Everything. Okay. All right. I'm keeping up with you. But in your opinion, new does take longer.
Yes.
Just more documentation.
Yep.
Yeah. And then the appraisal process is probably harder with new.
Well, and it is. Appraisers are, it's a little bit science, a little bit art. Like a lot of things we do, probably. But
it became a lot more science during the downturn, though, didn't it?
Yeah, like many things,
sure.
It's become, there's more rules to follow to try to reduce risk.
Sure.
Since the downturn.
How much, in your opinion, has that loosened up? Like, have we come back away from that a little bit, or is it just stuck to pretty much what it was during the downturn?
The rules haven't loosened up much.
Okay.
But there are some things that have. And some of those things we'll probably get into a little bit later. But some of the underwriting standards where, we could make our own decision, or a secondary market company that's buying the mortgage could make an underwriting decision, those have loosened up some again.
Okay.
And I think it's because this recovery has gone on so long.
Sure. But those have to do with the credit score, credit risk of the potential customer that you're doing business with, not necessarily with the appraisal of the potential home.
Correct. Okay. Appraisal rules are still pretty much in effect. The one thing that's changed, though, again, is secondary market rules for appraisals. There are some cases now you can qualify to not need an appraisal.
Really?
Yes. And so that's streamlining things in terms of that 45 days. We just did one that took 7 days because
what are the qualifications there? How do you get into that program?
They've been developing
all existing home stuff, I take it?
Yes.
Okay.
They've been developing statistics, data points basically from areas around the country from mortgages that they buy on values. And so they run it through a model, and if it's if they think the purchase price is close to the value they've got, and then the borrower has certain qualifications, then they can get a waiver on appraisal.
Okay.
We're really getting in the weeds here.
That's all right.
That's a positive,
I find it really interesting.
Positive change for just the housing industry in general.
Oh, yeah.
So long as it's not introducing a lot of new risk into the whole thing, which, that was a big part of the recession, was just that bubble of risk that got created.
Sure. And I mean, just overall willingness of people to go out and buy a new home, 45-day appraisals got to slow that down. And I know, at least in our business, when I'm talking to our sales reps and I'm like, hey guys, where's this deal in appraisal? Where's this deal in appraisal? This deal in appraisal? Right. People just have the opportunity to wait and change their mind.
That's true.
And, maybe say, we don't want to build anymore. We're fine where we're at, which there's nothing wrong with that, but it's just that amount of time creates change. So it's interesting to hear that the industry is actively trying to reduce that.
The reason why they're making these changes is because of the big delay in getting appraisals done. Why is there a big delay in getting appraisals done? They've tightened the rules for becoming an appraiser. Mm-hmm. It's very difficult licensing requirements. You got to do like 1,200 appraisers as a junior appraiser in a certain amount of time, like a year and a half, or whatever that number is. Otherwise, you're in this junior appraiser cycle forever. You never get to be...
That sounds like a lot.
It's a ton.
Like, how does someone in this community make that number?
It's really difficult to do, and so most appraisers are kind of phasing out, retiring. They're overloaded, so it backs up service time on getting an appraiser. So you might wait 2 weeks for an appraisal, which, when 10, 12, 15 years ago, that thing was turned around in 2 days.
Right.
So that's why they're coming up with different strategies, when really the problem is maybe they need to look at the qualifications to become an appraiser. I mean,
it makes sense.
There is some art to this, not rocket science.
That makes sense. But there is, we won't beat up regulation too bad. I mean, there was some beauty of tightening of the regulations, because I remember some of my mentors as I came into the industry would talk about the good old days when they could call the appraiser and be like, hey, I really need this one to go through for me. Okay, done, signed off, and then we had the credit risk issue that we had. And
that's a good point, because what they ended up doing was separating the ability for you or even me as the loan officer to call that appraiser directly. Mm-hmm. It's more independent now.
Sure.
Even the ordering, all the communication comes kind of outside the loan production function in a bank now.
Okay. Interesting. To
try to help minimize that type of communication to try to reach a number that you need.
Probably not a bad thing.
No, I don't think it is.
Yeah.
You want in a perfect world, if you're standing on the side, you want that to be an accurate value.
Yeah,
and to control the financing.
I wouldn't want my, if I was going in for a knee surgery, I wouldn't want my doctor to be able to be tipped by the medical device. I want him to pick the best one, not the highly cash valued.
Another industry that's seen some regulation.
That's right. Okay, we did get off on a tangent there, but I want to get back to talking about the different kinds of homes. Tyler and I covered the different kinds of construction, at least from our viewpoint, the major kinds and the kinds that the NHB recognizes as kind of major players. And luckily, modular is part of that group. Manufactured housing is part of that group. Panelized and site built. Those are the 4 that we kind of covered in a previous podcast. So I'd like to ask, from your opinion, what are the differences in financing those 4 different types of construction? And, when it comes to new home loans, do banks take the type of construction into account?
Okay, great question. My first question back is, I don't know what panelized is.
Okay.
Is that an industry term, and that just something that we don't get into much, potentially?
So, first of all, you need to go back and listen to all the podcasts. And that's your homework assignment. Okay, so panelized is just a theoretically faster way of site building. Okay. So site building is, I'm going to deliver every piece of this home to the site, stick by panel by stick, and then I'm going to put it together piece by piece by piece. Think about building your card house or your play house out of toothpicks.
Yes.
Okay. Panelizing is, I'm going to go into a warm factory like ours where I can, mechanize and automate the production process, and I'm going to build walls, potentially floor systems, potentially ceilings, and instead of shipping a bunch of sticks to a site, I'm going to ship pieces or cards to a site, and I'm going to build a card house, as it were.
Okay.
Following?
Yep.
And then we're known as volumetric modular, and that we ship modules that are, take up a volume of space, and depending on the manufacturer you work with, maybe you have cabinets installed like we do. Maybe there's primer on the walls. The ceilings are stomped. We've got flooring installed. So that's volumetric modular, where you're essentially shipping Lego blocks to a job site now, and you're stacking those up on site to make whatever house design you want.
Okay.
Yeah, and then you're familiar with the connotation of the word manufactured.
Absolutely.
Mobile home.
Yes.
Okay. HUD property.
Yep.
And you're familiar with HUD, I'm sure.
Yes, we are. And in our industry, we would refer to it just like you did, manufactured home lending, home financing. This has been a product that we've been involved with as well for many years. Manufactured homes, modular homes, site-built homes.
Yep.
From our standpoint, thinking about making a loan and taking into account risk factors for financing, we basically, if it's going to be a manufactured home, there is a connotation based on historical experience, that this particular product, the value isn't going to hold up over time as well as a site-built or modular home would.
Okay.
So that affects the financing terms that a borrower could get.
Okay.
It also means that a financing institution, like a bank, would like to sell that loan to send the risk down the river, basically, to a group that would put those together and turn it into an investment for somebody.
Okay.
So generally, a manufactured home is going to have higher borrowing costs, higher fees to put that loan together because of those risk factors, and a lot of it has to do with the ongoing value. The difference in our world is a manufactured home is going to depreciate over time in value, whereas a modular or site-built home would appreciate in value.
No matter what the market does, you're saying. Because there are times where the local site-built environment and the modular market may depreciate, like in a poor economy.
Yes.
But you're saying even in a great economy like we've had, or a good growing economy like we've had for the last 10 years, where most housing values are going up, a manufactured home value is going to continue to depreciate, go down.
Yes. At best, stay similar maybe, but we're talking a longer period of time than what you just described, 5-10 year period. We're talking a longer period of time.
Okay.
Because generally financing terms would be longer, 30-year fixed rate. So we're looking at that time horizon and saying, manufactured, it comes out new, you're putting a new product on, in place.
Sure.
And so it starts out great. But just the way it's put together, the materials used, how it's set on the foundation or not, that type of thing. Over time, it will not be the type of asset that you want, which would mitigate risk, like a site build or a modular home.
Sure. How much do you know? How much is, from the banking perspective, do you bankers know about how they're fixed to the foundation and what that does to the value over time? Or is that like part of the thinking?
Part of the thinking is we do have some requirements for. We're not interested maybe in making a loan on a piece of collateral like a manufactured home unless we can pass that risk off on the secondary market. They have pretty strict requirements.
Okay.
It needs to be affixed to a foundation.
Okay.
The title has to be retired because, it's a titled vehicle essentially.
Sure. Until
it arrives and gets changed into a dwelling. But it doesn't always necessarily happen like that. So those are some things we have to make sure happen.
So the secondary market, this is interesting. I've always told everybody that the secondary market held the title. And then when that loan was paid off, that title goes to the customer. You're saying that title gets retired because once it's on a permanent foundation, once it's on a foundation of some sort, it's now treated like any other home?
Correct.
Okay. Interesting.
And that's what they would like it to be. And I think that just protects against some additional risk.
Okay.
Of the mobility of the home.
Sure. So do you guys do 15-year loans on a manufactured product, or is it only 30-year?
You could.
You can?
Yeah.
Okay, depending on the borrower's credit rating.
And I think in aggregate, it's generally a 30-year fixed because the demographic of someone going into that home typically would be someone that affordability is a concern.
Factor.
And a 30-year loan is much more affordable than a 15-year loan.
Sure. What about, all I know to call them is, low down payment loans. And when I say that, I'm thinking of maybe USDA, FHA, rural development kind of stuff. Mm-hmm. I don't know if there's other products out there. I'm sure there are, but are those available for, manufactured home, chattel property, whatever you want to call it?
That's a good question. I think there can be a manufactured home FHA product, but you don't have to offer it. That's not something that we would offer.
Okay.
That we currently offer. But I think that you can find financing with low down payment for manufactured home. The reason why we wouldn't offer it or you might not find it elsewhere is it's just riskier type of transaction. Down payment is a strong correlator to overall risk of loss in a default situation.
Sure.
So it's probably the biggest one, and then debt to income is second.
Okay. So typically on a manufactured home, you're going to look for a bigger down payment. You're going to see more conventional style loans?
5% or more. You can get PMI with private mortgage insurance. You can get that on a manufactured home. They typically require a 5% minimum down payment.
Okay. So 5%, I was thinking maybe it was going to be more like a 20% conventional style if it's going to be a higher risk product, but you see a lot of 5%.
Yes, and the reason why is, again, just the affordability perception is, in general, our government, our society, our economic situation believes strongly in home ownership as a big value for an individual over their lifetime. One, as an investment, but for other reasons also. It's
the American dream.
The American dream.
Yep.
That's what we say all the time. Financing the American dream one home at a time. Yep. That's something we believe in at First Federal also. So you're looking for a way to do it that would help someone, avoiding putting someone in a situation that wouldn't help them. But the goal is to provide an avenue for someone to own a home. And so a lot of times down payment is a significant roadblock for people. And that's why you've got the programs you described, USDA, FHA, and even in manufactured housing, that's geared to be more of an affordable product.
Sure.
There's a lot of demand out there, honestly, for some products like that. And so down payment is also an issue in those areas. So you do have programs that allow for a lower down payment than 20%, even though it's a higher risk. It goes back to kind of the mission, the goal of getting an opportunity for someone like that to get into a home.
Yeah, that makes sense. Did you keep up with Warren Buffett's State of the Union, as it were, letter that he came out with? Was it this week or last week?
I haven't.
You haven't?
No. Tell me about it.
He had some interesting insight. So Warren Buffett owns Clayton, nation's largest home builder. Clayton mainly produces manufactured housing, but they also have recently, they do some modular stuff too out of their factories, specific factories, and they do some mixed factories where they're doing mod and manufacture on the same product line. And then they've started to get into buying up site development companies and bigger builders as well. So they're really kind of growing their portfolio of what they do across the market space.
Diversifying.
Yeah. And from what little I read of, I didn't read the actual letter. I read a couple synopses, but he Warren Buffett was bullish on the housing market heading into a potential slowdown economy even, and I think his stance was this country is still very much in need of affordable housing, and manufactured housing is something that can produce that, and big production housing is something that can produce that, and technology of housing is changing. And I like to think he was referring to, systemized building of homes, modular production specifically. And he's bullish on that because he thinks that change can help produce a more affordable housing product, which can make the American dream, as we were just talking about, more achievable for more people. And he thinks there's going to be a demand for that. Now, I'll back that up by saying he also owns financing companies. So, I would be bullish if I could bring a customer in and offer them a low or no money down situation that I could then, sell them. I'd sell them the financing. You're going to sell them the home. If they are a big risk, you have the wherewithal to go get that home in the case of chattel property, unlike you can do with any other house.
True.
You put a mod on a foundation and it's going to be really, really tough to go get it. Same with site built. I've seen people move site builts, but it's really tough to do. And more likely you're going to be turning that into a repo situation where you're going to lose value on it. Right. So chattel property, you can in most situations go pick that thing up, take it back to the factory, refurb it, and resell it. So in his in his situation, he's got the whole product that he's selling, and there's not as much risk maybe.
It's like a full circle maybe in their situation. Well, I think I had read that Clayton Homes was the number one manufactured home builder maybe a year or two ago in number of units.
Sure. Yeah.
Put out there.
Yeah, I think they are.
And I think they probably finance a lot of those themselves.
Right. Yeah.
Or through affiliated financing.
Right. All under the same umbrella at least.
Yeah. So that makes sense from that standpoint.
Yeah.
If a bank's going to do it, I think it's pretty fair to say that it will require a retired title and basically try to make it look and feel as much like a home, permanent home as possible.
Sure.
But that's interesting to talk about the need out there. There is a big demand for homes people can afford. And I think that goes to another point we haven't really touched on yet is the home price appreciation. You talked about regulation in terms of financing through the recessionary time period. The housing bubble created a lot of changes that came about for banks and how we go about doing things. And it was mainly housing related. But also, I know that's changed some. I don't know specifics, but what's changed in the construction? The cost of building homes probably has gone up as well in some of the things that are required now. And also,
absolutely.
Market forces too. Like prices have gone up more than wages, so that just creates an imbalance.
Yep, absolutely. So what's changed, in my opinion, with home building and making it less and less affordable? One is regulation. So the NHB does a study that says 25% of every home that goes out into the field is regulatory cost. I mean, so right there, if you think about that, think about that in terms of square footage. If I could afford a 1,250 square foot home, potentially without regulation or with a lot less regulation, maybe is a better way to put it, now I can only afford 1,000 square foot home. That's a big difference. That's a whole room.
That's huge.
Now I live in a 2-bedroom, 2-bath versus a 3-bedroom, 2-bath. If affordability is a factor in my life. So regulation's been a big part of it. We'll get into a little I'll get on my soapbox here.
Yes, that's what I was wanting.
Dang it, Evan, you got me. So, I'm a high believer in energy efficiency, but I also believe that it's unfortunately a little bit of a luxury. It's kind of like you're going to spend a lot more money up front to get your bills down later. And if you have that cash in your pocket, it's kind of like someone who has the cash to go out and buy a new car as a secondary car,
right?
Versus going out and getting themselves into further debt for that same secondary car, a toy car, let's say, is the example I'm trying to go for. Energy efficiency is awesome, and I love it. I'm all about it. But right now, our industry is trying to get, and I say our industry, new construction industry as a whole, is trying to get almost all new homes built with a less than 10 air exchanges per hour in a home. So me and you were living in our homes. We both got kids. Kids run around, breathing in and out. They're opening doors. They're closing doors all the time. We want that. If you study that in a vacuum, we want them to not have to breathe the same air over and over again to a degree. I mean, that's got to be greater than 1 time per hour, but we also think there should be fresh air coming in. But we want to regulate it apparently so that you don't have to run through your furnace, run through your air conditioner. And the new rule is less than 10 times per hour. And that's great. I think that's a great number. But the goal in like 5 years is like 3.
Wow.
Yeah, I mean, that's a
putting
very,
some
very
pressure
tight
on
home.
everything.
Yeah. And so, especially site builders right now, we inherently build very tight modules, but especially site builders are having to pour a lot more cost into their homes and a lot more time into the build, which costs money and labor to get down to these, I'm not going to say ridiculous numbers, but to these numbers that you could argue, like, does it really need to be that tight? Like,
right.
I could open a window, you know.
That's
you know,
right.
There's cost savings ways to get to the same result. So I think regulation's been a part of it. I think increased quality to the point where we're not allowing people to build affordable homes would be a much shorter way of saying what I just said. But
well, that's really interesting to think about, because we've also seen like construction times seem to have spread longer than what we have experienced traditionally in the past.
Sure.
And so maybe that goes into what you're saying.
Sure.
Thinking about for a financing institution, we've got a very great construction product, and it's a one-time close fixed rate product. So the day that we commit your application, you know exactly what interest rate you're going to have for 30 years plus the construction time, which we generally do like a 10-month construction window for site built. I think it's 6 month for modular.
Is it? That's interesting.
So
I like that plug right there. But.
Yeah. So, but that's extended. It used to be 6 month for site built and 4 month for modular.
Right.
So I mean, it's just everything has extended a little bit. It seems like from our side of the street and putting these deals together and getting them done, which has increased interest rate risk for a bank. So
sure.
It's just kind of interesting how that works together.
Yeah, it is. Yeah. So I mean, you kind of asked me. We got here by talking about affordability, and like we were saying, the downturn created the regulation, which created, rising costs and all this stuff. But pre-downturn, in your opinion, was there a lot more manufactured home financing?
Yes.
Yeah.
And I would even say, like, I'm just thinking First Federal as a typical mortgage bank, mortgage lender, we did a lot more pre-mortgage bubble.
And there were more secondary sources to sell that off to.
There really were.
Yeah.
There were lots of players in this economy of home building, I would say, home financing, the secondary market of buying the contract, buying the loans. And when that recession hit, the less solvent ones went away.
Right.
Rules changed. Capital requirements changed, where you had to prove you had a lot more reserves to weather a bigger downturn, and so companies went away. So it did change a lot since that time, and just as normal cycles, like that's what we're talking about with regulations, appraisal requirements, like things are loosening again a little bit as the further you get from that panic moment of, oh my gosh, we're in a terrible recession.
Sure.
Like just as humans, over time we push the limit. You push it. You try to achieve something. So I think you're seeing more creativity again come into it. Of okay, how can we get this done? How can this happen? I'm just seeing that in terms of an industry, vision.
Do you see it changing to the point where Fannie and Freddie are going to be allowed to buy HUD paper again?
I don't know. It seems like we haven't got to that mental point as national leadership on these types of issues.
Because that was a big line drawn during the recession.
It was.
No more manufactured home buying by the major secondary source in the market, which is Fannie and Freddie, right?
And that's what limited our ability to do a lot in that space.
Yeah. Which goes back to why Warren Buffett is bullish on his housing markets, which a big part of are manufacturers, because he's got the financing source already in-house to go ahead and buy that HUD paper.
It's like a closed loop system.
I know.
Gosh, he's brilliant.
Oracle of Omaha.
See, this is why more people probably listen to his speeches or read his annual letter than the presidential stuff or Congress stuff for sure. So.
He's got a few more followers than my podcast.
Yeah. Building, though. One follower at a time.
Yeah.
No, that's a good point.
Okay, so we talked about manufactured home financing. Talk to us a little bit about the difference between site built, modular, panelized. do you guys take into effect the method of construction? Is that a major ordeal to you during the financing process for a new home?
Well, I will say, manufactured is kind of its own category.
Sure.
Okay, but in terms of modular, panelized, or site built, to us, we view them the same.
Okay, so do you, to the point where, like you say, it's a residential code built home, or it's built to IRC, it's built to local, like, how do you guys categorize that?
That's a technical question. I guess I'm not prepared to answer in terms of codes because we never talk about that.
Well, so you just answered my question.
Yep.
Which was how do banks differentiate?
We would look at it in terms of how that national secondary market views it.
Okay.
And since they basically allow our rules and guidelines for selling that loan, site built, modular, viewed the same.
And do you report them? Is there a category? Is there a box you check when you submit that loan or put that loan out on the marketplace of either it's site built or modular new construction?
I don't think we do.
Yeah.
No, that would be in the appraisal, which we are required to. Another change that happened after the recession, we are required to submit that appraisal to the secondary market investor.
Okay.
So they would see that, but there's not a data point that I'm aware of that would differentiate. So it's really treated the same.
Yeah. I mean, when I got into the industry, one of my big questions was when I first walked into this plant was like, what's the difference between this and manufacturer? What's the difference between this and site built? And somebody at the time produced some Fannie Freddie text to me that said you can cross-evaluate between the two different construction methods, site-built and modular, and they should be treated the same, appraised the same. So I was like, great, wonderful, I'm going to jump into this industry now. And then as a salesperson, I ran time and time again into bankers or appraisers who would say, nope, we're not going to do your loan because you're manufactured, or because you're not site built, or because modular, I can't appraise it like a site built. The appraisal came in lower. And so I don't know if there was just like a lot of confusion that's finally being cleared up in the industry.
That could be. My dad has appraised a lot of homes over the years, was a licensed appraiser, and had always said the same thing, that this is as solid or more solid than anything that you see site built in terms of conditions, and and is treated the same valuation-wise. It doesn't affect the value. I mean, that's really all this comes down to is this method, does it affect the long-term value of this asset over this method? And it doesn't. That's proven time and time again just from comparable sales.
And that's great to hear because, I mean, for a long time we've fought that, as it were, in this industry. And our whole argument's been like, it's not a type of home, guys. Yeah. It's not a type of home. It's a method of construction. Yes. Once it's on your permanent foundation, you tell me where the mate wall is. And in most houses, you can't even do that. Yeah. Where the marriaging wall is. So, okay.
So that sounds like a stigma more than anything else, lack of education.
Yeah. Let's talk about tiny homes for a second. Yeah. What's a banker's take on a tiny home?
So, personal experience, we haven't had any yet on this. None. We've done some wacky things like a pole barn with some living quarters in it. I mean, that kind of stuff comes up, but I think it's the same.
I've heard those called shouse.
Oh, really?
Have you heard that term?
No, I haven't. I
learned that from one of our builders in Illinois. Yeah, Shed House. Yeah,
that's hilarious.
Yeah, they're big into them.
Okay.
And in Illinois, changes your tax, I think, somehow, how much property taxes you pay because you don't have a home, which isn't going to be appraised the same way apparently as one of these houses, and so it's a major difference in your payment to the government every single month or year.
Interesting.
And in Illinois, property taxes are outrageous, obviously, which is why they deal with that.
If you're from Illinois listening, come over to Indiana. Yeah. We're way better.
Unless you're doing business with one of our builders in Illinois, then you're doing a great job. Stick with them.
We find, I think that if you have a kitchen in this, then I think in the state of Indiana you can tax it that way.
Okay.
So that
seems a lot more sense.
That seems to be the factor there, but it's a less costly method of putting together, a dwelling, I guess I'd say. So thinking of tiny homes, it's kind of the same issue for financing is, okay, what's the marketability of this particular product? And so that comes down to just if I'm trying to sell it, I put it up for sale, I list it, or I sell by owner, how likely is someone going to buy it in a reasonable amount of time?
Sure.
What kind of value can I get on resale? And then the other side is then also the risk of that piece of it. Can a financing institution offset that risk by selling it? Are there enough of these being financed that somebody on a bigger scale can aggregate these loans together and sell it as an investment to somebody.
Sure.
So then it's volume based.
Okay.
Is there enough of these going on that the industry really understands how to put this together to make it something the bank can sell that off?
Okay.
So that's just a big, I mean, it's kind of a weird answer, but that's the big factor in terms of like what a local institution could do with something like that.
Yeah. So if somebody brought you guys a tiny home today, would you just say, we can't help you? Or would you say, let us look into it?
Well, this goes back to the mission of a bank.
Mm-hmm.
And so I could tell you First Federal Savings Bank, we would look at it because that's the way we do business.
Yeah, you guys want to get people houses.
But someone else could say that doesn't fit into a box that we use, and so we're not going to even waste time looking at it. So it's just, that's kind of then the different personality, the different objectives of the financing institution would make that decision. So the way we've gone about business for 53 years is to we make time and take time to look at each individual applicants on their own merit. It's not as much aggregate boxing things up and moving things along. It's saying, okay, this doesn't fit in a box. Let's look at, every single aspect of this application.
Sure.
Where you're working, how long it's been, all those different factors that go into it that maybe it doesn't meet a typical underwriting standard. Type of house is one of those. So going back to tiny house, it's a tiny house. Well, let's take a look at this and see what the actual risk is for us. And so we've got the ability as a bank to make a portfolio loan in that case and take on the longer term financing risk there. And so that's where we've done some of these shouses, as you call them,
right.
as our Illinois friends call them.
Right.
We've done some of those when the situation made sense. We understood what the borrower was trying to do, and it fit well with what they're doing. Risk of default is low. That way the marketability isn't as big of a risk, in our opinion, and so we can make that decision.
Sure.
A lot of institutions don't want to be making decisions anymore.
Yeah.
They rely on some algorithm to tell them, and then they just move on.
Yeah.
But we take a lot of pride and enjoyment in that. So that's just one differentiator. You can find other institutions that would do that. But so I wouldn't give up just because you got to know someplace. They're probably just looking at, they don't want to mess around with it.
Sure. That makes a lot of sense. I mean, you hear the word tiny house a lot in the conversations you listen to, don't you? Or are we just too far removed? Out here in the Midwest, there's too much land.
I think it's not as big here yet, but we're hearing a little bit about it up in St. Joseph County, which is that South Bend area.
Yeah.
We've got a home builder or two up there that are working on some projects, and that comes back into, I think they're looking at kind of urban space.
Yeah.
How can we effectively fill some urban space with a home that somebody could afford and improve the quality of their life?
Sure.
So it's used as kind of a tool to fill in some of these city areas.
Sure.
With a higher quality dwelling.
Sure. Yeah. Tyler gets upset when we talk about tiny houses because there's a couple things going on there, in our opinion. There's the tiny house that's really popular on like HGTV right now, which is on wheels.
On wheels, yes.
And again, it's an RV or a park model or a piece of chattel property, and people are calling them tiny houses and thinking that they should, be living in them permanently. And if they are, great, but then that may create that division in financeability.
Yeah,
that's a word.
Well, that's true.
And then I'll go back to my soapbox on affordability, but there's nothing wrong with a small house, though, and that's another thing that, in my opinion, we've gotten away from as a country. People walk in here all day long saying, I have to have a 3-bedroom, 2-bath, but I want to keep my entire build cost under $100,000.
Yeah.
The cost of construction has gone up too much. You just can't do it anymore. I mean, we've got some great neighborhoods here in town that you can go find a $90,000, $80,000 house, but what you're going to find is those houses are typically smaller, right? They're 2-bedroom, 2-bath, or 2-bedroom, 1-bath houses. So if somebody comes into us and they say, hey, I want a small or tiny house that's, 800 to 1,200 square feet, maybe that's getting too big already to even call it a small house, you can save yourself a lot of money and you can get back into more affordable housing. But what we find is most people can't live or think they can't live within those square footages, and therefore it breaks the bank on that $100,000 budget, and there's just no way to get it done. So it's an interesting term around here, tiny house.
I can understand that.
Yeah.
And from bank perspective, it seems like there's a big gap, a missing component of a construction cost that maybe isn't achievable anymore. Maybe it's the expectations that you're talking about, where, we're so blessed in general
Sure.
that our expectations are higher than our parents were,
Sure.
our grandparents were.
Yep.
And that's just
As a
because of
country.
success, you
Yep.
know, and what we feel like we need as a standard of living. So that, I'm sure that has played into it, but it seems like there's that dollar amount of construction builds that you see those homes in the neighborhood you're talking about, and you're thinking of the heyday of when lots of these homes went in,
Sure.
and they're not going in anymore. Okay, why is that?
Yeah, exactly. And it just seems to me like, you know, if we were able to build a little bit smaller footprint, if we were able to not be lax by any means. I mean, I'm a big proponent of building quality. I'm a big building science nerd. I love, like I said earlier, I love tightness of housing, but you know, it gets to a point where what's the return on investment is my point. And can we get more people into affordable housing in this country if we focus on return on investment instead of setting a standard of everyone has to live in this pristine box or above before they can even have a house, you know? So soapbox over.
That's some big socioeconomic topics, but that's good.
Yeah. So one last topic I wanted to ask before I move on to a question about how you would advise people to plan for a new home financially. Have you heard anything about, I'll go back to the big animal of Clayton, a mixed code or a mixed use house that's somewhere between a manufactured home and any other home? Have you heard any?
No, I haven't.
Okay.
Tell me a little.
Well, I don't know that I've heard too much either. I just didn't know if in the banking industry, if this was a thing, if the talk of affordability was leading to a talk of mixing the codes, as it were.
I haven't seen that yet in any industry.
I know I've read a couple articles of Clayton execs, you know, saying we believe that there should be some mixed breed where we're not necessarily a manufactured home, but we're not necessarily held to the same rigorous standards of a new residential code built home. And maybe what they're talking about is similar to what I'm talking about in terms of, you know, let's not be so strict. I'm not sure what they're trying to say, but I didn't know if you were in that conversation at all.
No, I'll look into that a little bit more. That's a good kind of topic to take away for me. But what you're saying is, can we build it so it'll last a little bit more? Maybe it fixes to a foundation, but it's not necessarily to the stricter codes of what a true modular project would be.
What a new, I mean, like right now, you know, we're held, depending on what state we're built to, you know, to 2015 IECC energy conservation codes, or, you know, the 2012 residential building codes. And I think what they're saying is we've drug ourselves so much into things that are really more of a high-end quality thing than they are a necessity thing, that maybe there should be some kind of middle ground so that we can stay focused on affordability.
That topic seems really viable to me.
Yeah,
actually.
I'd be interested to hear if that starts to be a topic in the banking world in the next several years.
We would look for that. Of course, bankers are always risk averse, so we'd be looking at, you know, down the road, is this property going to be something that we can count on for value?
Sure.
Based on how we looked at it at the beginning.
Sure.
But if, you know, there's always room for wiggle room and understanding a different way to do it. If we could overcome that particular aspect of it, I think that would have some real legs. Because, like I said, we've got a lot of qualified borrowers that could go in and look at a home that's, you know, new home $150,000, but there's not really any building out there that are fulfilling the dream that they have. Yeah,
it's hard to do.
Yep.
Well, I'll say that in my opinion, the HUD code, the reason that that's riskier is, I mean, you see on the news, tornado wiped through area, an entire mobile home park was destroyed, and the site-built homes or the modular homes in the neighborhood next to it, you know, were damaged, but they weren't damaged to the extent that the mobile home park was. Yeah. So what Housing and Urban Development did wrong, in my opinion, is they applied one code to our entire country, which is, you know, geographically much bigger than most other countries. Yep. I mean, especially European countries, if you want to think about it that way.
It is.
You know, northern Michigan and even our state of Indiana, but let alone Florida, are just vastly different animals.
Yep.
In Florida, you need to be worried about hurricanes. In northern Michigan, you need to be worried about snow collapsing your roof, right?
Yep.
Well, the HUD code doesn't account for that. It doesn't account for those differences, and it doesn't account for foundation differences and ground differences, and where I should be tying into different foundation systems depending on where I am geographically.
Would it be feasible for that coding to be state specific? I mean, you're already dealing with some of that now, you said.
Sure. Yeah. So the residential code that we deal with now is adopted as state specific level. And so if there was some kind of affordability factor where we could step back and take away some of the some of the, like I said, the higher end amenity based stuff that I would argue about and get back to some more of the necessity stuff, but without going back to a national code that didn't address geographic changes, then yeah, maybe there is that conversation to be had. And maybe that's where, although when I first read the headline of let's mix HUD and mod code, and that was probably more of a newspaper.
Yikes.
Yeah. Yeah, that was probably more of the newspaper, article writer than it was the Clayton execs that I was reading about. I was like, oh no, this is going to be terrible for our industry.
Right.
People are going to be even more confused. Appraisers are going to be more confused. But I think, now that I talked through it, maybe what they were getting at is we got to stay focused on affordability if we really want to answer the question of the housing shortage that everyone's talking about.
And maybe that's their proposal as something they could feasibly think they could pull off,
Yeah.
That's good. Well, I think anytime you can get, we've talked about kind of national versus more localized decision-making, risk-taking. Anytime you get into the big national things, speaking of like Freddie and Fannie, secondary market, you get into where they have to generalize and aggregate lots of things, and it leaves those peaks and valleys out of the equation, just completely generalizes it all the way down the line.
Yeah.
And so you lose that ability to, in our instance, make a good decision.
Sure.
And it's a good borrower. It doesn't fit the Freddie Mac box.
Right.
But that's because they're looking at so much data and making, an algorithm that spits that out, similar with HUD codes. Looking at the whole thing in one picture, making their best generalized rules that they have to compromise on. But when you get down to the specifics for an area or specifics for a borrower, it's always better if you can make those decisions more as close to local as possible.
Sure.
That's our big, now I'm on my soapbox of philosophy.
No, I love it. I love that philosophy. I mean, there's definitely a pendulum swing. And like we said earlier, we don't want it so free and local that you can finance your buddy, even though he doesn't really deserve to get the financing. But
you're right. Standards are important.
Yeah. You also don't want to treat everyone as the same kind of national rule. It makes a lot of sense. Okay, so we had about like 8 more points I want to cover today, but we don't want to get into a 6-hour session here. So just real quickly, what would you as a banker tell someone to do if they were going to prepare for a new home financially?
Okay. The first thing we always recommend is it doesn't cost anything to talk to an expert.
Okay. Yeah.
We recommend a pre-qualification phone call, appointment, whatever's convenient for you, where you can talk to a mortgage loan originator and they'll ask you questions about your specific situation. And those kind of things are, what are your earnings? How long have you been working at this particular job? Is anyone else going to be on this loan? They're going to put together all of your obligations that you have. They'll ask for your permission to run a credit report, but it doesn't cost you anything. So we can really get down to some of the data points that are going to affect the decision of how much can you spend on a house? What's that appropriate level for you? Not only just getting a loan approved, but then thinking back to like your situation.
Sure.
How much should I be spending for a dwelling with the things that I've already promised to pay, how much money I expect to make, and my life situation?
It sounds like you guys, even as a small bank, and I'm sure a lot of other smaller banks have done this too, have made that conversation a lot easier to have, because a customer could jump online without having to talk to anybody or know where to go to, fill out some information on your website, and then get a call to them from that expert.
Right.
Yeah,
you just explained it better than I did. That's exactly the process. We don't actually even have our full application. The mortgage application is the same no matter where you go. It's an industry standard.
Sure.
We don't have to get all that information to have a conversation. And so that's where we like to start is we'll ask you the few questions we need to ask you. You can fill those out online. Mm-hmm. We'll call you and we'll get into it and get going on that. So you've got a resource, because you kind of touched on this at the beginning. Like, this is the biggest, on how many times you're going to do this in your life. This is the biggest financial transaction you're probably going to make in your lifetime.
Right.
It's intimidating.
Right.
That's scary.
Yeah.
I was in the same position you were. Like, I don't know what I'm doing.
Right.
My dad was a realtor. I had an uncle who was a banker. Like, I still don't know what I was doing when I bought my first house. Like, there's so many details, and you don't want to make a wrong decision. That's just human nature.
Right.
So we really take the time to say, okay, human to human, let's talk about this situation. You're looking to better your life, buy a home, maybe move up to a next level home. You got a new job, you've got more earnings, whatever that situation might be, sit down and understand it. So pre-qualification for free is a really important step, we believe.
Okay. Pre-qualification / education session.
Absolutely.
Which I'm all about. Hey,
Information sharing.
Give me all the analytics you can. And you're going to have the conversation at the time. Is 20% down conventional? Is a 5% down? Is some kind of 0% down available for me?
And if you think about everything we've talked about today in the whole, it's just so much to discuss.
Yeah.
Like, you might have the ability to put 20% down. Should you? Mm-hmm. What's the consequence?
Sure.
Or I only want to put 5% down. That's all I can put down on the dollar amount I'm looking at. Should you look at a lower dollar amount? There's just all of those things. It's going to be your decision at the end of the day what you're trying to do, but you're going to want someone to kind of, provide feedback. Throw that against the wall. Let's see what that should be, and then we can look into interest rates, the true cost of it. There's more that goes into it cost-wise than just your payment, though, too, Alex. Like, are you going to be able to save at the end of the day for maintenance?
Yeah.
I read something recently that you need to be putting away 1% of your home, the price you paid for your home. Put away every year 1% of that price for maintenance, future maintenance.
Yeah, if your furnace goes out.
Oh my gosh!
Yeah,
remember the first time that probably happened to you or whatever. I've got to put a new roof on this year.
That's
those aren't cheap.
You can go with the new Tesla solar roof tile.
Maybe we should talk after this. That sounds good. No, those are considerations. You've got to have the funds available for that because you may not have enough equity in your home to redo the financing to come up with that money.
Sure.
So just a lot of things to think about. And, what we love doing is being involved with that conversation. So that's the start of it. Also thinking about like where you want to be. You're probably going to need some advice on what community makes sense for you. If you're in a bigger city, we serve the Elkhart, Mishawaka, South Bend areas, Warsaw, Indianapolis, like school districts. All these types of things play into, and then the dollar amount of those particular areas. So there's just a lot to talk about.
Sure.
So talking with your lender, talking to a realtor is a great way to kind of get that all scoped out.
Yeah,
for
local
yourself.
Experts, basically.
Absolutely.
Free advice from local experts.
So thinking of that, Alex, this was really interesting too. I saw a headline about millennials. So the homeownership's up. It's highest since it's ever been since
That's
2014.
like a huge piece of news for our industry.
Yes.
Because like everyone in our new construction industry is going, the entire industry has been going, when are these people going to get into houses?
Yes.
Everyone's renting. When are they going to start buying houses?
So I think they're thinking maybe it's starting to happen. A lot of them are going through the process of financing completely and finding a home completely online. You've got your Zillows, you've got all these different places. You can do a ton of research now also online.
Sure.
But they're finding that there's some buyer's remorse with some of these folks because they've done mostly everything online.
Yeah.
And they missed certain factors that conversationally probably would have come up.
Sure.
And so they didn't understand about the maintenance costs.
Yeah.
And now all of a sudden I wish I wouldn't have bought the house.
Right.
There's some major factors there. So we do always recommend just a good conversation.
Yeah. I was going to put a down payment on our first apartment right before we got married. And I was I had lived in the Indianapolis region for several years, so I thought I knew the area. So I didn't really want to talk to a realtor at the time. And I jumped directly to, got online, did the research I thought I needed to do, jumped directly to the leasing agent I needed to talk to, went into their office, saw the apartment one time. It looked great. It was recently renovated, thought the rent was great, put the money down, and didn't do much research about the neighborhood, didn't ask anybody, didn't talk to a realtor about the neighborhood or anything. First night we lived in the apartment, there was a 3-person shooting right,
oh my gosh.
right outside. And I had signed a year lease, so like... Yeah, having the conversation with an expert is a big check in my box nowadays before I make a big move.
We're humans and we're also American. We kind of like to do things ourselves sometimes.
Yeah, Wild West.
Yeah, that's right. So, but this is major. You don't want to shortchange the process probably on this.
Sure.
Just with the dollars that you're talking about. So, coming up with that budget, pre-qualification can help, but then also just taking the time to come up with the budget. If I'm building a home, if I'm talking to Alex Berlin or one of your builders about putting together a Rochester home, what do I have to spend here? Is my job safe? Am I planning on changing jobs? Like all those things affect financing too.
Sure. Sure. Interesting. Okay, great. All right. Well, I'll go ahead and kind of wrap it up today. I'd like to invite you back for a later date because we had other stuff to cover here.
Okay.
I want to talk more about, I know you've got a big heart for, service and for taking care of the people in your community and, dealing with nonprofits who take care of people and stuff. I know you got a big heart for that stuff. So at some point, I'm going to have to invite you back, and we'll talk a little bit about some more like affordable housing initiatives that are nonprofits that really help.
That'd be great.
Help get people into houses for either like 0% interest loans, or I know you've got some interest in some other programs, and I was referring to Habitat there. But talk a little bit more too next time you're on about Fannie Freddie reform. That's kind of a topic in the government right now, but nothing's really quite happened, right?
Right.
Am I wrong in saying that?
No, that's true. Ever since the recessionary period happened and the government kind of took more control over them, and that hasn't changed since that happened, 2009, 10, whatever it was. They did that to protect against some major problems.
Right.
But untangling that is a huge topic because what those huge institutions provide is the ability for a bank like ours to offer a low fixed rate financing option for the people in our community.
Yeah.
So it's essential to affordable home ownership, just from that simple standpoint there.
Sure.
Otherwise, a bank like ours would have to probably offer an adjustable rate mortgage, something that would have more interest rate risk for the borrower, maybe would be a little bit higher rate, affect some affordability, payment issues. So they are key players in what we do every day to provide that American dream. And so this is one of the most important topics, but there has not been a great equation on how to make these a little bit more private again.
Right. Because the fear, correct me if I'm wrong, and I don't know much about this. This is one article that I've read, but like the fear is if you totally privatize them, now they're suddenly going to be held to the same standards of funding that all other private instances are held to, and that means they're going to need like $600 billion in capital on hand.
Yeah.
Some outrageous number. I think I underquoted it even just now.
That's the topic, recapitalizing Freddie and Fannie.
Yeah.
And we say private, but we just mean not government controlled and under that conservatorship, but actually they're public companies.
Right.
So that's what you're talking about.
Yeah.
Like to meet the Wall Street standard of being a company worth investing in, they're completely undercapitalized. So they have to figure out how to get people to invest in those again.
Sure. And like you said a second ago, without them, as they are today at least, or something similar, the financing market changes totally.
Yes.
Especially at a community level.
Absolutely.
Doing business with community banks would change drastically. So it's a major conversation in that.
They set the market
right now.
essentially to be able to provide this type of great lending, and that's been the case since whenever they came to be, whether it was 80s or early 90s. Since then, it's made purchasing a home, building a home, extremely affordable in general.
And if the topic in the industry is affordable housing, and the topic also has to be we've got to take care of that entity. We've got to make sure it's still there, and it's not required to have ridiculous funding in order to exist, because it wouldn't be here anymore if it was, right?
Right.
Yeah.
And they don't want to set up a situation where there would be the mechanisms to try to take on additional risk, which created the housing bubble in the past. So they're trying to not just turn things back over also and have some of the same issues before. Learn from our mistakes, right?
Yeah. So we'll keep our ear
to
the news feed on that one, and then if we see any movement, or we'll give it some time. Regardless, I'd like to have you back on and talk about that a little bit more. And like I said, talk about some of the interests that you have in how affordable housing institutions that are doing it, in a non-for-profit way.
Yeah, there are several great options out there, even just in our communities here. Mm-hmm. But if you look nationwide, like it's a completely separate, in some cases, but different model for affordability. And a lot of times you'll find each community kind of has their own kind of flavor.
Sure.
But some of it is funded by government grants too, federal government grants. So it's good programs.
Interesting. Okay, what about closing thoughts from Evan?
Okay, thinking of, I told you at the beginning, I'm kind of a big picture, long-term.
I like it.
Long-term guy. I'm also an optimist, so you got to You got to keep that in mind
Okay.
too. I don't know
wrong with that.
I don't know what that qualifies me for either. Maybe nothing, but we have a lot of conversations about overall economy. Housing market's a big player in that. So we always talk about that. And, labor's been strong. That's amazing.
Yep.
Interest rates have done some weird things recently.
When you say labor's been strong, I want to clarify because the pessimists in our community talk about how labor is terrible right now. People, if you walk from business to business and say, hey, how's your labor? Terrible, terrible. What they mean is I can't find enough good people. And so when you say labor's strong, you mean the job.
Looking at it from the worker's perspective rather than the business perspective. Sure. So that's a great thing to keep in mind, to clarify, is if I want to find a job as an American today, I can go find one probably today and do something.
Yeah, and employers are being forced to take care of people better than they were
benefits,
during a recession.
Wages. So
good stuff. Big
picture, wages are rising faster than inflation. That's key if you want standard of living to go up.
Sure.
So this is something we welcome that's happening right now.
But still not rising near what the housing affordability index
is
rising.
The problem.
And there's the problem there. Yeah.
There's the problem. So looking at home affordability from the price appreciation, it isn't going up as fast as it was last year at the moment. But that's a big factor. 6% a year nationwide, wages growing 3% a year. Yeah. Inflation under 2%. I mean, those are kind of just the general numbers. But anyway, I think we've got a good economy for this year. If we just want to look at this year. The housing market isn't great. There's not a lot of homes on the market to buy. There's probably construction production constraints on how many homes can be built.
Yep.
It's not meeting demand.
Yep. Because, and this is where I would say, people in our industry are saying labor is bad, but because labor is hard to find and good people are hard to find at entry-level job positions, because like you said, it's the market is such that people can go out and go move up job positions. Right. So that entry-level job position, which is needed on a lot of construction sites, it's very hard to find right now. So the time you were talking about, financing time, where it used to be 6 months for modular, it used to be 4 months for modular, now it's 6 months for modular. And part of that's because we just don't have enough people to keep up right now. Yeah, it's an interesting problem to have.
I know. And you think these things, thinking economic theory, like they level out over time. You get the pendulum again, you mentioned.
Yeah.
You get to hit an extreme and then some other force brings it back. But it'll be interesting to see how this works out in terms of what you need to produce to meet the demand of what the people want to consume.
Sure.
So it's interesting.
So when looking at economic outlook stuff and being an optimist, what do you take of the fact that the inverted yield curve flipped recently? Was that a month ago?
Yeah, I think it was in November, December.
Oh, was it that long ago? Okay.
Time frame, December, I think.
Okay.
Basically, there's several different rate points, and you talk about a yield curve. It's like comparing rates at 3 months, and then you go up the staircase all the way up to 30-year rates.
Sure.
Okay. Normally, you get a higher rate of return for longer periods of time.
Right.
What's happened now is the Federal Reserve Bank, which is an independent bank sponsored by the government, they're worried about inflation going too fast. And they always find out how fast it's going too late. So they're trying to raise nominal interest rates high enough so that it doesn't cause the economy to go faster or slow the economy down. That is a theoretical number.
Yeah.
So they've raised it to a point and tried to assess the results of that. But basically, those extremely short-term rates are higher than some of the longer-term rates.
So that's why they call it an inverted.
Yes. So if you think on your left-hand side it's low, right-hand side it's high, in this situation, because they've manipulated the low-term rates and the market handles all the other longer-term rates, the market doesn't think inflation's going to go crazy, and generally they're the smarter ones. But the short-term, in trying to fend off inflation running wild, has raised the rates. It's a little bit higher on the left-hand side than the middle right now.
Okay. It's
not higher than the full right side. But when this happens, it generally does indicate that maybe a recessionary time is a couple years away.
Yeah. So your focus on outlook for this year is good still, and I agree. I totally agree with you.
From and what even long term,
I see.
even long term, Alex, because think about the things we've talked about. There's not going to be another housing bubble. Like things are,
on wood right now.
Things are better. Things are being done differently. They're done better. We have learned from some of those situations. It might be a bubble in a different area. Student loan debt's really high.
Yeah,
that's a concern for people trying to buy a home and get financing. But in terms of even if we had a downturn, this isn't going to be the kind of thing we're remembering that we just went through.
Right.
And that isn't always necessarily all bad. It resets some things. So I'm thinking in the broader sense, like we're not going to be hitting a major problem that's going to knock a bunch of people down like it happened in 2009.
Yeah.
And so I think we're set up with the stable economy that we're experiencing, that we may have slow growth, but I think we're going to see mainly growth, maybe a hiccup, but back to growth.
Yeah. Well, I hope you're right, and I'm reading a lot of economists that think you're right. I know that NAHB had economists. They think you're right. You're right on point with them there. Yeah, it may slow down a little bit, but no reason to freak out.
Yeah.
Don't go put all your money in the ground because it's,
we're emotional people. We're emotional people. We're triggered by things we remember. We're triggered by things we read or see. And so even someone mentioning the word recession on TV, people just start getting scared.
Oh, yeah. And I mean, that was a bad one.
It was bad. Yeah. Historically horrible, really. And we're in a weird recovery. It's been one of the longest positive economic growth periods that we've had as a country. And so that also makes you feel weird, doesn't it?
Yeah.
Like that can't hold up.
You're just waiting for it to. When are we going to fall? It's got to happen.
So that's why the chatter is so, kind of grips you emotionally, because we don't know. We don't know what effect it would have or what's going to happen, how deep it's, we might fall into negative territory or what have you. But that's why I'm not so worried. Every year is a unique time in our history. Historical stats are great. They do inform you of trends or some things, but every year is different.
Sure.
We've never been in this situation as a country as we are right now. So
that's a great point.
Anyway, I'm off my soapbox now.
No, that was a great closer. Anything else?
I don't think so. Thanks for having me. It's great visiting with you. These are exciting topics for nerds like us.
Yeah. You want to do a First Fed plug?
Yeah.
You feel like you got enough in, or
maybe not? First Federal Savings Bank. We're a North Central Indiana mortgage leader, but we do lend in lots of areas, and you don't have to be close to one of our branches to be a great customer of ours. Our main product that we lead with is a mortgage loan, and so we've got 20,000 friends and family that have mortgages with us, and we'd love to make you another one.
Yeah, I love that your guys' the whole reason you're there and you're, raison d'etre is to get people in houses. Yeah, that's
mission
cool.
oriented.
Yeah, that's cool for us to hear.
www.firstfederalbanking.com.
Okay, great. Well, I love the positivity on the economy. I love the information you shared with me and everybody today. Thanks for coming in today, Evan. Hope to have you back again soon.
Okay, thanks, Alex.